How to open up a IRA account with Etrade. This is an individual retirement account. You may want to open up a traditional, a Roth, or a SEP account, right? And we're going to get straight into that, exactly what that is. So stay tuned. Once again, ladies and gentlemen, boys and girls, and children of all ages, this is your host, the Prince of Investing, Prince Dykes, coming all the way live from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button, and hit that bell icon to get new videos as they drop. Check out the description box to support our books, and also to follow us on our other social media platforms. But as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So the first thing we're going to talk about here is how to open up an IRA with Etrade. Step one, what you're going to do is go to etrade.com. You got it. Step two, once you get here, up on here on the right hand side, open an account. Now it says, let's get started. What do you want to do? So of course you don't want a brokerage account, you want a retirement account. You can do a rollover IRA, you can do a traditional IRA, you can do a Roth IRA, we can do a SEP. So now the first thing is, if you already have an employer, let's say you got a job, they offer you a 401k, I think you can put like 19 grand into that thing, something like that. I think depending on the income level, all that good stuff like that. Now, if you kind of want something on your own, you got a max of like about $5,000 you can put in here to start an IRA account. And you can either roll over. Let's say if you're leaving one job, you're rolling over a 401k or 413B that you have with an employer. You want to roll it over because you're going to a new job or whatever the case may be. You want to manage it yourself or have somebody else manage it. You can do that here. You can roll it over. Now, how traditional works is you pay the taxes later. So for prime example, let's say if you made $1,000 a month, right? So, and let's say if you decide to take 10% of your income, put it in your retirement account. So you make $1,000, 10% of $1,000 is $100. $100 goes into your retirement account. Now you're left with $900 left. The government taxes you on your $900. And they said the government taxes you another $100. Now you're left with $800. That's whatever the case may be. But you notice in that example, you pay your retirement account before you paid your taxes. Now what's going to happen is, Uncle Sam is always going to find a way to get you back, right? So when you turn 59 and a half or you go to withdraw on this account, the money will be taxed on withdrawal, right? Depending on whatever tax rate income level that you're at that time. So this is usually good for people who are in a higher tax bracket for most people who are in a higher tax bracket now, and they know when they get older, they'll be in a lower tax bracket. It kind of works out for them, depending on how the tax rates go. But seek the help of a CPA is my best advice to help you navigate through that. Now, the next thing is a Roth IRA. A Roth IRA is in that same exact example, but you pay your taxes now. You pay your taxes first, then you invest. So let's go back to the same scenario. Let's say you make $1,000 a month. You want to put $10,000 in your account. 10% of your earnings in your account. So you got $1,000 a month that you made. The government taxes that $1,000. You're left with $900. Out of that $900, you put 10% of that into your retirement account, which is $90. And then, now you're left with $810 for whatever. So notice in scenario A and in scenario B, scenario A person put $100 into his account, person B put $90 into his account. Now, the pros of a traditional is the money is not taxed, so your money can grow tax-free, right? And then on the back end, when you go to pay your taxes, if you're in a higher tax bracket or if tax rates are higher or whatever the case may be, you can end up paying a nice little penny on the back end. But the benefit is your money gets to grow tax-free. Now, a Roth IRA, the thing is I'm paying my taxes now. For me, a Roth IRA works better because I know I'm going to be in a higher tax bracket in the future. So I'd rather pay the lower taxes now versus paying the higher taxes later. All right. Once again, seek the help of a professional to help you navigate through that if you need the help. And the last one is a SEP account, right? This is for self-employed people, right? It's a low-cost retirement plan for self-employed people. So if you own your own business or whatever the case may be, you can have an IRA still. You don't have to have a job. You can open up a self-employed thing, right? Retirement account. So now, once you make your decision, for example, I'm just going to go with Roth for training purposes. You click that. Now it's going to ask you if you already have an E-Trade account. If you do have one, you're going to put your username and password in, and it's already going to kind of populate your information. But for this scenario, I'm going to say no. Now it's going to be simple and easy. You're going to fill out your name, first, middle, last, phone number, email address, your residence, zip code, city, and state. Now it's going to be like your identity verification. You got to put in your date of birth, social security number, your marital status, number of dependents, occupation, annual income, liquid net worth, total net worth, all that good stuff like that. So then you got to answer these questions down here. Am I a family member or employed by a registered broker-dealer, Security Exchange Commission, blah, 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 or whatever. So making sure you ain't got no insider trading type deal. Or am I director of a policymaker of a publicly owned company? If you are a 10% shareholder in a publicly owned company, if you've been notified by the IRS of backholding. So you got to select those, answer all that stuff. Then you're going to click continue. Now you're going to get to investment profile. When you get to investment profile, they want to know what is your investment experience. You're going to click that. What is your account objective? It's going to ask you if it's speculative, growth, income, capital preservation. Where will your fund accounts come from? It's going to ask you where you're getting your money from, real estate, unemployment, disability, or whatever. What is the purpose you expect from this account? Long-term growth, investing for tax planning, college, minor, whatever. What is your options and investment knowledge? Your opinion, your options investment knowledge. Okay, you put in here if you got any experience trading options. If you don't, put no. Now they want to ask you, are you experienced with buying calls, selling calls, spreads? You don't know what none of that is. You just click no prior experience. If you do, you click it. And specify your prior security trading experience. With options, they want to know how many trades you did a year, how many you did with futures, all that, with bonds, with stock, all of the good stuff. So you put in here your years, how many trades you did a year. They want to know your experience level. And once you got all that stuff finished, you click continue. Now you're on to your account setup, right? Uninvested cash choices, options, uninvested cash. Where do you want to go? You want to go into a retirement sweep deposit or a cash balance program, right? Retirement sweep deposit, a bank deposit, your affiliates, or E-Trade. It's telling you how to protect your money. Money that's not invested, where do you want to go, right? And with me, usually I do the retirement sweep deposit for this particular thing. Advanced trading for futures, subject to approval. That's if you want to add futures trading, you can click on it. If you want to add a power of attorney, you can click here. I would like to grant power of attorney to someone. A trusted contact, you can click here if you want to add somebody to be a trusted contact for your account. Now you're going to click here, continue, so we can go to review application. Now you're going to ask you who the beneficiaries you want of your account. Put down your kids to be a primary or a contingent of your account. Who you want your beneficiaries to be. You can put it to a trust. You can give it to a charity. And you can put down here you want to give them 5%, 10%, nothing, whatever you want to do. Wife, husband, son, daughter, cat, dog. Give it to you want your beneficiaries to be your children or whatever the case may be. And then once you got that done, you're going to hit continue. When you got that done, you're going to review your account. Once you review your account, you're going to click continue. Once you review your application, you're going to hit submit to create your ID. Once you create your ID, it's going to be your username and password. Then once you got your username and password, then it's going to ask you about funding it. Where you want money to come from, your checking, your savings, your direct deposit, however you want to do it. And boom, there you go. Just that simple and quick. You got a Roth IRA account. That's a Roth. But you got an IRA. Whether it's a Roth traditional, a SEP, self-employed, congratulations. And the best of wishes into your retirement future. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe, peace, be safe, I'm out, and thank you.